Hello traders, you are welcome back to the Forex Geek channel. In this video, we are just going to be diving into a powerful trading strategy using the whole moving average. Okay, now it is a trend following indicator that is faster, smoother, and more accurate than traditional moving averages. I'm just going to add the indicator to the chart right away. Okay, this is the whole moving average. Now, if you have struggled with lagging indicators, and false signals, this strategy will help you identify trends early, reduce noise, and improve your trade execution. So in this video, you're going to learn how the whole moving average works and why it is different from traditional moving averages. You're also going to learn the best time frames and market conditions to use it in, and you're going to learn a step-by-step strategy to trade effectively with the whole moving average. I'm also going to be showing you common mistakes to avoid when using the whole moving average in your trades. Okay, stay tuned, because by the end of this video you will see some examples where we consider how this strategy can help you when trading the financial markets. But before we get started, smash that like button and subscribe for more in-depth trading strategies and market analysis. All right, now let us jump right into it. We're going to start by understanding what the whole moving average is, like what makes this moving average unique. All right, we're going to be looking at that right away. Now, the whole moving average, for short, HMA. All right, the HMA was developed by Alan Hall to address one major issue with traditional moving averages, which is lag. All right. Now, unlike the SMA, unlike the simple moving average, and the EMA, which is the exponential moving average, which can be slow to react, the HMA is designed to be fast, smooth, and responsive. Now, the SMA averages price data over a period, but it reacts slowly to price changes. The EMA gives more weight to recent prices, making it faster but still prone to whipsaws. However, the HMA, on the other hand, combines weighted moving averages to create a much smoother and faster trend line, reducing lag while keeping accuracy high. Now, because of its speed, the HMA is great for identifying trend direction, reversals, and entry points with fewer false signals. All right. So now that we know how the whole moving average works, let us just quickly look at how you can implement this indicator in your trading strategies. All right. So it is very important that you choose the right time frame. Okay, the first step is choosing the right time frame. Now, the HMA works well on multiple time frames. Okay, that's actually true. You can use it on any time frame, but its effectiveness depends on your trading style. Okay, now so for that reason, scalpers and intraday traders can use the 5 minute, you know, the 5-minute or the 15-minute. Scalpers or intraday traders can use the 5-minute chart or the 15-minute chart, okay, for their trades, while swing traders can use 1 hour or the 4 hours chart. All right, then position traders can use the daily time frame for long-term trends. Okay, so the second step is identifying the trend direction. A rising HMA, like what we can see happen around here, a rising HMA indicates a bullish trend. All right, so you'll be looking for buying opportunities. On the other hand, a falling HMA, like what we can see happening around here and here, a falling HMA indicates a bearish trend, so you'll be looking for selling opportunities. All right, now if the HMA is flat or choppy, like you can see what was happening around here, if the HMA is flat or choppy, the market is ranging, so you might want to avoid trading in such choppy conditions. Okay, now the third step is trading with the whole moving average strategy. All right, so here is how you can enter and exit trades using the HMA. For a buy trade, you should look for the HMA to turn upwards, all right, signaling a trend shift. Then you enter the trade after a bullish candle. All right, you should wait for the formation of a bullish candle that closes above the HMA. For example, you can see that you can enter here or here, right? Then you set your stop loss just below the recent support or the HMA line. Then your take profit can be at the nearest resistance. Okay, you can look for resistance levels to set your take profit, or you can enter when you notice that the HMA has now started coming downwards. Okay, then for a sell trade, you look for the HMA to turn downwards from an uptrend to a downtrend. So the HMA should turn downwards, and that is going to be indicating a bearish trend. And you enter the trade after a bearish candle closes below the HMA. For example, what we can see happen here. All right, then you can set your stop loss above the recent resistance or the HMA line, and then take your profit at the next support level. Okay, you can actually take profit at the next support level, or you can just wait for when the HMA starts trending back upwards and then you exit your sell. Okay, so a pro tip is you should combine the HMA with other indicators. All right, like you can use RSI, for example, or the MACD, you know, just for extra confirmation and higher accuracy. All right, now let us talk about some common mistakes that traders make when using the whole moving average and how to avoid them. The first mistake is trading in ranging markets. Now the HMA works best in trending markets, so you should avoid trading when price action is choppy or moving sideways. Okay, the second mistake is ignoring key support and resistance levels. Do not rely solely on the HMA, so you should check price action and key levels before entering a trade. All right, then the third mistake is using the wrong time frame. If you are a short-term trader, using a high time frame like the daily chart will be too slow. If you are a swing trader, using a 5-minute chart might give too many false signals. All right, so take note of using the right time frame for your trading style. And then another mistake is not using a stop loss. The market can reverse unexpectedly, so always set a stop loss to protect your capital. All right, so there you have it, traders. The whole moving average strategy is a powerful way to identify trends, reduce lag, and improve trade accuracy. If you found this video helpful, smash that like button and subscribe for more trading strategies and technical analysis. Drop a comment below if you want me to cover other indicators or strategies in the next video. Thank you for watching, and I'll see you in the next one. Happy trading.